The price gone up. Gas prices, car prices, grocery prices, everything has gone up. And even if your wage has gone up, it might not feel like enough because of inflation. Today I'm going to be sharing with you 5 ways we can beat inflation. Hi everyone, this is Camilla the Focus Spender, and welcome to my channel where I teach you how to get out of debt, save more money, and invest so that you can build wealth and leave a lasting legacy. Now, what is inflation? Everywhere you go, people have been talking about inflation. It's on the news, it's in the newspaper, it's causing the economy to go crazy. So what is it exactly? Inflation is the rate of increases in prices over time. In the first quarter of 2022, inflation was at almost 8%. Last year, it was at 4.7, and in 2011, it was only at 3.2. So in the span of just a few months, it has skyrocketed and is causing the prices of everything to increase. Because of all the stimulus checks we got and because of all these wage increases, which I am happy for, everyone has a lot more cash in their hand, and that means demand is going up, but supply is not meeting that demand. Because of all the things that have been happening, supply has not been increasing in the way that demand has been increasing. So therefore, the price of everything is skyrocketing. So you might have received a basic 2% increase in your wages from last year to this year, but because, like I said, inflation is now at almost 8%, it is not keeping up with the pace of prices. You're gonna feel like you're just not earning enough money because the money that you had last week that covered all your groceries is just not going to cover it. I know for me personally, I went to the gas station and we filled up our tank and we spent about $80, where usually it's $40 to spend on gas. So that's one way that inflation is taking a bite out of my pocket. But then also just going to the grocery store. Everything at the grocery store is so much more expensive. So your money is just not going as far as it used to. And you might be feeling like, what am I going to do now? My wages are not increasing and I don't know what to do to help myself out. So today I'm going to be sharing 5 ways you can beat the rising costs due to inflation. Number 1, reduce your expenses. So I know I just said the prices of everything has gone up and you're like, how in the world am I going to reduce expenses if everything costs more? So you have to be strategic in looking for ways to cut your costs. For instance, so this year I decided my internet company was crapola. It conked out on me during a live workshop for my job where all of a sudden, no one could hear me and I had to have my boss take over the presentation because my internet died. And that happened quite a few times. And I thought, you know what? I don't want to be with this internet provider anymore. And the price keeps increasing. Every time I would pay the bill, it was a few dollars higher, or like every so months I would notice that it'd be a few dollars higher. My internet bill was over $100 and I decided to make a switch. We switched to Verizon. This is not an ad for Verizon, but we switched to Verizon and now my internet is at $49. And it's going to stay the same price for the next 2 to 3 years. So that's one way I brought down my expenses. So you can look at your phone, your internet. Like, there's no time for brand loyalty in a time like this. When companies are raising your prices, it's time to switch to another company that might be cheaper or might have some introductory rate that can help you bring your price down. If you have car insurance, if you have home insurance, you can look for different options. So you really want to think about bringing the cost of things that you use down. And then also, if you have a ton of subscriptions, maybe you have Netflix, Hulu, Prime, Disney Plus, whatever you might have, and you're only watching 2 of those 4 items, it might be time to think about cutting some of those subscription services. So you really have to be strategic, look at your budget and see, what am I really using and where can I cut? So my second tip on how to beat inflation is to make more money. Now, you might be thinking, girl, how am I gonna just make more money? That sounds like magic. But think about it. There are definitely things you can do to bring in extra income. One, if you are in a job where you're like, I know I could make more money. I know that there's a competitor who's gonna pay me more to do the exact same job. My resume, my skills, everything's on par. Dust off your resume and apply for that job because it might be that time to make a switch. You might even be lucky, you get an offer from another job, you come back to your current job and they might be able to match that salary or even beat it. Or just talk to your job to see if you can get a raise. If this is something where you're like, you know what, if I just made $1,000 more or $5,000 more, I would be comfortable in my job. Maybe they'll be willing to give you that increase because at the end of the day, it costs so much money to train a new employee that they would rather spend a little bit more to keep you than to let you go and to train someone else. Another thing you can do is to start looking at ways to bring in income passively or a little bit more actively, like a side hustle. There's so many side hustles out there. You can do Uber, you can be a translator. And there's this app that I found called Steady. I'm going to leave it in the description box below, and I promise I will do a review of the app soon, but it's a way to bring in extra income. It has part-time jobs, it has full-time jobs, it has side hustles, it has ways to earn extra money. So like whenever you're watching a video online and an influencer is like, oh, if you use my link, you'll get this amount of money. This app will give links like that to you. So you can start making money off of the things that you use and you love by sharing those links with your friends. So I'll definitely leave a link to that app in the description box below. The third way you can beat inflation is to keep investing. I know right now the stock market is in a tank. The value of my net income has gone down at least $40,000 to $50,000 just in the last few months, but I'm not panicking and I'm just going to keep investing. This is not the time to stop investing. If you haven't started investing, it might be hard for me to convince you to start investing, even though I say go ahead and start. But if you're already an investor, this is not the time to stop. Right now, the prices of everything is down, yes, but that means you get to buy at a lower rate so that in a couple years when the economy rebounds, because let's face it, it's probably not going to happen in the next few months, you're going to be able to cash in on the increases, like the substantial increases that will happen over time. A lot of people made out like abandoned in 2008 when the economy tanked. I remember I had just finished grad school at the time and I wasn't making much money, so I was only investing the bare minimum. But if I had a lot to invest at that time, I would have done so well. And so right now there's another opportunity to get into the market while everything is low and have your money really grow for you. So you definitely want to keep investing if you are an investor. The fourth thing you can do to beat inflation is to invest in a Series I savings bond. So what is a Series I savings bond? It is a savings bond that is sold directly by the US government. If you go to treasurydirect.gov, you can buy one of these savings bonds. You can put in as little as $25 up to $10,000 per year. And right now, the interest rate is 9.62%. I have to fact check, but it's about 9.62%, which is unheard of. This is a very safe investment that is backed by the US government. So if you have the opportunity to invest in one of these savings bonds, I would say go for it. I just heard about it and I'm going to try it out. So what I'm going to do, I'm going to try it out and I'm going to come back in a few months with the results or how I did with the process. You definitely want to look into this savings bonds. I will also leave a link to it in the description box below because it's definitely a safe way to invest your money. And this interest rate is the highest that it's ever been ever. So right now is the time to invest. And if you don't want to go all the way into a savings bond and taking the trouble to buy one of those, you can also put your money in a high yield savings account. So I should call this video 6 things to beat inflation, but I decided to lump these 2 items together with the savings bond and the high yield savings account. So with high yield savings accounts, pretty recently, they weren't yielding that much interest. Like my high yield savings account with, I think Capital One was like 0.5%, 0.8%, where years ago it was at 5%. Because interest rates have been so low for the last couple of years, interest rates in savings accounts have been really low. One of the things that the government is doing to bring down inflation is to increase interest rates. And they're doing that to make borrowing money less attractive. They don't want people buying houses and cars and businesses to expand as fast as they are doing right now. So they're making borrowing money a lot more expensive. And so they really want people to save their money. And one of the effects of raising interest rates on borrowing money is to raise the interest rates on savings accounts. So savings accounts interest rates are going up a little bit. Right now, Capital One is at 1%, Lending Club is at 1.26%, and I only can see this going higher and higher. So if you don't want to invest, you should definitely be switching your money into a high yield savings account, and that way you can get some type of interest on your money, even though 1% as compared to 8% in inflation is a drop in the bucket. But it's something. And the 5th thing I want you to do is to pay down your high interest debt. So like I said about the government raising interest rates, it is having the effect of raising interest rates on credit card balances. So your credit card companies can charge higher interest rates, and they are. Right now, the average interest rate for a credit card is at 18.89%, which again is far higher than the 8% in inflation, and is far higher than the 1% that you can get in a high yield savings account. So your money should not be going into high interest debt. The only people making out when you carry a balance from month to month is the credit card company. So your best bet is to pay it off as quickly as possible, because if inflation doesn't go down soon and interest rates continue to rise, then the rates on your credit card will continue to rise as well. So you want to make sure that you're keeping that money for yourself. Once you pay off your debt, then you don't have to worry about that high interest debt, and you can use your excess money to invest and to save. Now, if you haven't already, it's time to reevaluate your budget to make sure that you are controlling where your money is going and how it's working for you. I have a freebie in my description box. It is my sinking funds tracker that I would love for you to download, and that will also help you to plan out your long-term and short-term spending. So be sure to grab it below. I hope you enjoyed this video, and I will see you next time.